Hi, welcome to D Street AI Analysis and Insights, a monthly video series on Indian equity markets. I'm Archit Singhal. Today's video has two parts. In the first part, I'll talk about valuations for Nifty and various sectors. In the second part, I'll talk about overall market outlook. Beginning with the valuations, on your screen you can see Nifty's forward PE chart for the last 10 years. So two things to highlight from this chart. One, while recently Nifty has hit its all-time peak, in terms of valuations, the multiple price to earnings at 19 P is still 20% below the peak multiple which was seen in October 2021. Second thing is, if you look from pre-COVID level to current level, Nifty price to earnings is broadly similar. Although Nifty in terms of absolute number has moved from 12,000 to 20,000. Basically, the earnings catch-up has happened. Nifty profits have moved almost 80% from FY20 to FY23, which is where valuations are similar. Moving on to the key sectors, in this video, I will cover banking, IT, auto and FMCG. These four sectors together account for 2/3 of Nifty. Starting with the financials, the banking sector remains the key earnings driver for Nifty. Most of the banks continue to report a healthy loan growth and a reduction in NPAs. In terms of valuation, on forward price to book, the valuations for Nifty Bank are reasonable and are close to the last 10-year averages. Moving to the IT sector, while 1Q FY24 results were weak on growth, the market and street expects better second half of FY24. In terms of valuations, while valuations seem high on the last 10-year averages, they are still 25% below the peak which was seen in October of 2021. What we need to look for going forward is the commentary on growth, margin improvement, as well as the investments in the AI. Moving to the FMCG sector, valuations are high in context of the last 10-year averages. What we need to monitor is the demand uptick in the upcoming festive season and the margin improvement across the FMCG names. Finally, moving to the auto sector, most of the companies in the sector remain in an upcycle, and despite the rise in prices, the valuations seem reasonable because they have been backed by the earnings growth. Moving to the last part of the video, that is the overall market outlook. In terms of growth, Nifty profit growth has been healthy for the last 3 years and the earnings outlook remains good. In terms of valuations, while there are some spaces which have gone up sharply in the recent market rally and there is exuberance in the sentiment, there are also spaces within the large cap or within the banking sector where valuations are reasonable. Investors as of now should be cautious where valuations are overheated and should be selective in the stock picking. In terms of interest rates, we are broadly towards the end of the interest rate hike cycle. The US Fed in the meeting on 20th September kept the rates unchanged. What we need to watch out for is the Brent crude oil, which is up almost 25% in the last 3 months. Sustenance of higher oil prices may mean that inflation concerns might be back on the table. Other than the interest rates and Brent crude, investors need to monitor the flows and the earnings growth in the upcoming result season, which starts in October. That's it from my side. Thank you for your time and I'll see you next month.
Investments in securities markets are subject to market risk. Read all related documents carefully before investing.